Execution matters a lot in trading. If you intend to win a game, then you should know all the rules of the game in advance. Then only you can plan and show your talent in the live game. In the trader's perspective, this is called a trade plan. Plenty of successful traders give the utmost significance to the trade plan. As a trader, before entering any trade, you should know the bare minimum below 5 aspects. 1. Based on your system, where is your entry point? 2. In case your analysis goes wrong or trade setup fails, where is your stop loss? 3. Where is your anticipated exit based on your system to book the profits? 4. What is the amount you are risking in this particular trade? And 5. How much amount do you risk on this trade out of your entire portfolio? Each time before you make a trade, answering the above questions can help you to plan your trade. The above-mentioned trade plan applies to all types of trading. Let's discuss how to define this plan for our breakout trading system. Entry, stop loss, target. As shown in image 4.1, entry should come just a few ticks above the high of the breakout candle. Stop loss will be a few ticks below the low of the breakout candle. This script is showing a breakout from a downtrend. So, one can aim at the beginning of the trend line or topmost swing as the target. Only opt to take the trade if it shows a minimum of 1:2 risk-reward. Otherwise, you need to ignore the setup and look for better trade setups. Note: entry should come only above the high of the breakout candle. Never buy below the high of the breakout candle. Also, avoid the trade if it opens about 2% from the previous day high, as it increases the stop loss points and also it might attract profit booking. Don't buy even if it opens about 2% and comes back to the previous day high, because it's against to breakout concept. As shown in image 4.2, entry should come just a few ticks above the high of the breakout candle. Stop loss will be a few ticks below the low of the breakout candle. This script shows a breakout from a sideways trend, so one can aim for the same width of the sideways trend as the target. Only opt to take the trade if it shows a minimum of 1:2 risk-reward. Otherwise, you need to ignore the setup and look for better trade setups. Image 4.3 shows a breakout of all-time highs in a script. In this case, it's tough to come up with a fixed target as we don't have any reference points on the upside. One can plan to book profits at 1:2 risk-reward or trail stop loss below every swing low. You never know how far it will go. Besides, one can also plan partial exit at 1:2 risk-reward and manage the remaining position with trail SL concept. The untold story about trail SL. It is the most crucial aspect of this trading system. This concept is also missing in most of the trading systems. Read this section a few times until it gets into your subconscious mind. If you look at image 4.4, we have a clear breakout trade. Breakout candle is big, quick time, absence of selling wick, good volume. It satisfies all our checklists. Hence, we will place a buy order tomorrow above the high of the breakout candle. If triggered, the stop loss will be below the low of the breakout candle. The next day, it triggered our buy order as price traded above the high of the breakout candle. However, it failed to give a big move on the upside. Remember, our criteria for a breakout is the price should give a big move in quick time with the absence of selling. Breakout rule applies for the next 2 to 3 trading sessions after the breakout, as smart money will act either through selling or more buying or doing nothing. If they buy, the price will go up. If they don't react, the price will go up or it will stay there, but selling will not come. If they sell, the price will show selling or fall. But in the above case, we can see an evident selling on the next day after the breakout. Hence, it doesn't make any sense to retain the original stop loss. It's better to trail below the low of the current day candle as shown in image 4.5. This action of trail SL resulted in a break-even trade, maybe a few points loss, but it saved 90% of the initial risk amount. Note, sometimes price will hit your trail SL and then reach your target. One should not change the trail SL concept just because of this. The idea of this system is to reduce the initial risk as much as possible if the price shows any danger and to write the profits with clear breakout scripts. If you look at image 4.7, we have a clear all-time high breakout trade. Breakout candle is big, quick time, absence of selling wick and good volume. It satisfies all our checklists. Hence, we will place a buy order tomorrow above the high of the breakout candle. If triggered, the stop loss will be below the low of the breakout candle.